Today's the first ever White House Crypto Summit where Donald Trump is going to be inviting key figureheads, founders, and CEOs from the crypto industry to have a big discussion on regulations that are going to come into the future and how this industry is going to progress. We've also had a ton of other news this week that has caused some big volatility in the market, where we had the crypto reserve being announced over the last weekend that caused a little spike in the Bitcoin price on Sunday into Monday, only to get completely retracted as we opened up the week when tariffs were implemented by Tuesday. The fears and uncertainty of that has even kind of trickled into the stock market. We've also got now, 2 days later, the tariffs getting unwinded a bit and put on hold in portions here until potentially April 2nd. Ton of things to cover here. I'm joined by Casi here, and we're both going to be covering all the charts, some of the news, and our opinions and views. So make sure you grab a cup of coffee, whether it's hot or iced. Hit the likes on the way in. Make sure you're subscribed to the channel, and we got a jam-packed episode here for you today. What are your thoughts on this market? This week has been quite the headwind. As far as technicals go, I think we both have some pretty decent views there. There's a bit of non-ending, news catalysts that are just making, your head
Just
spin.
whiplashing us back and forth, right?
Absolutely,
No, that's
absolutely.
exactly how I feel. I feel like the technicals, the charts are just sound, they're ready, and we are just getting thrown back and forth with all of the news. But I do think that macro trend is about to kick off and really get a decision here soon. And we're just waiting on that larger news and decision coming. So I totally agree with you. This week has been absolutely wild, and the markets have definitely responded to that. So yeah, I'm excited to be here and hear your thoughts on definitely the fundamentals, because I'm so much into the charts and technical, and I know you have a little bit of grasp on that. So I'm excited to hear what you have to say about everything happening. So
Yeah, absolutely. And before we get started here, I did want to just kind of give a thank you to our channel partner, which is Coinbase. And if you're brand new to crypto or just looking for a trusted and well-established exchange that has a ton of offers, essentially, like they have over 80 pairs at this point. They have futures offering. It's pretty much a one-stop shop over there at Coinbase. I've been using them pretty much exclusively my whole crypto career ever since 2017. It was my first place that I actually made a purchase on. It's my only on ramp and off ramp, honestly, ever since some of the regulations have come into the U.S. And if you would like to get started with Coinbase, be sure to click our link down below, and you can get up to $200 to start your crypto journey. So be sure to check that out if you're interested. So remember, over the weekend, we got this drop here from Donald Trump here, basically stating that U.S. crypto reserve was essentially going to be launched here, and they included certain coins such as XRP, Solana, Cardano. Came back with another message a little bit later and mentioned Bitcoin and Ethereum, and then we saw all of those assets, including pretty much the whole crypto market, kind of explode over the weekend. And I'm curious to see. We'll go ahead and bring up your chart real quick and just kind of see
okay.
what the price action looked like around that time, and then we'll take a look at what happened as we moved on over to Tuesday.
Yeah, definitely. Let's take a look at that. So I have Bitcoin 4-hour chart pulled up here just so we can see a little bit more clearly the price action. And this was that zero 0.5 Fibonacci bounce that we talked about, I think, in a few videos. We knew it was heading down towards these levels. And look at the nice bounce that we had right off of the reserve news. So it bounced right up that 0.5 at 80,000 and came all the way up to the 236 retracement at 95,000. So that was an incredible run. If we get that measured out, just so we can see exactly how measure it out. So from the bottom all the way up to the top, that was over 21% rise there off of that reserve news. So that was incredible for Bitcoin to see. So yeah, definitely incredible. And then just like you mentioned, we had that tariff news that hit almost the day after that Monday. So this was that huge retracement that nearly brought us all the way back down and retraced almost that entire move. So we went up 21%, and then based on that tariff news, dropped over 14%. So yeah, it was pretty incredible to see. And this is exactly what we were talking about. This news is just giving us such a whiplash this week. Um, I'm really curious to see if we're going to come now. I'm really curious to see now if we're going to come down to that 382 level again as support. So that is at 86,400. Is that kind of what you're thinking, Paul?
You had mentioned that that point 0.5 was that big area right there, and I just want to
Hmm.
point out a little bit of additional thing here as well, is that that $80,000 was a high time frame average that Bitcoin, all assets truly tend to come down to. The reason I want to point it out is because when we cover a couple other things, I wanted to show just the importance of those regions. So it's a really big level to have come down to, and it sits about that 80K. This is on the Coinbase chart, so it depends on which exchange you're looking at. It might be a little bit, $100 difference here and there,
Right.
but like you said, came right down to it. It's holding at that 0.5 region. So far, healthy retrace. Originally, I was looking for the 382 as a really big area to see if we were going to come down, kind of wick through and hold, and maybe get that continuation to the upside, similar like what
Hmm.
we did back in August of last year. But like you said, the 0.5 still kind of held up so far, and it
Yes.
being that high time frame average, which just similar to like a 200-day moving average. This is literally the average of a whole year. So this is a 365-day non-moving average. So above it is bullish, below it is bearish. So for me, that's kind of the line in the sand for the current price action, to see if we're going to hold this uptrend at the moment.
Hmm.
Losing that, I wouldn't really love to see that. I think that would probably open the gates for a little bit more of a deeper pullback.
Yeah.
But as long as we're holding at that 80K, in my opinion, I think that we'll continue this move to the upside. And I think we can challenge back into the highs, and then, look to see it. Obviously, if we get that reclaim of the all-time high, and then that 115, 120 area is definitely on the dock, in my opinion. I was curious to know
Hmm.
what your outlook here, more of the midterm, would be on
Hmm.
Bitcoin.
Yeah, Paul. No, that is so interesting because just like you said, I'm right aligned with what you're thinking and using looks like just a little bit different techniques as well. So, just like you mentioned, midterm, I'm really hoping we hold that point 0.5 retrace. Just like you said, I'm following exactly what you're thinking. Above it, we continue with that bullish momentum that we've seen over the last several months, but below it, we could really start to get very bearish in the correction. And I am hoping that we do hold that 0.5 and continue to make new highs, just like you said. If I get rescaled here a bit, so we can go to the top target, we do have pretty much just like what you mentioned. I have my upward targets at 121,000
Nice.
up to 128,000. And I know that there are many analysts who believe that it could get up to 126. So this aligns right with what many analysts believe. If we do come up to make a new high, we'll probably top right around there.
So when we're looking at the grand scheme here, for me, I was up until this point, I actually was able to note the reversal area really well at that 110,000. There was a major reversal pattern known as a bearish shark, which is a harmonic, a sequence of Fibonacci's, and all these things that I can kind of get into. But overall,
Hmm.
I think we could all agree, we were getting a little toppy at that region. Had a huge
Definitely.
impulse move from basically 48 up to 110. And so far, we've really done nothing too crazy. I know people get very fearful and very bearish as we're coming down, just like when we're super bullish at the high. And
Right.
we're talking on news today, we have that huge summit. So it's going to be interesting to see what comes out of that. I did want to bring up this idea because this is a news event that's well known, whereas the previous two, such as the reserve getting dropped on Sunday when we weren't expecting it, the tariff news kind of coming and going, basically come dropping out of nowhere as well. Uh,
Right.
those type of news waves, tend to have a little bit more of I think, a short-term effect, because they come in and they kind of cause that uncertainty. Tomorrow's well-known event is a little different, in my opinion. I feel like it
Hmm.
could pretty much be a nothing burger, because everybody's going to be like weighted with bated breath, just like a Fed meeting or anything like that. When those big days come up
Right.
after we've had such volatile moves, everybody's really concerned over those type of events. So we'll
Hmm.
be interesting to see how that goes today.
Hmm.
But yeah, I think that the 80K area is a big one. Originally, I was actually anticipating we might even see a little bit more deeper correction, especially kind of blowing through the 0.382 originally, with
Hmm.
about 86K. When we came down to 80, I was aware of 80K obviously for the high time frame.
Yeah.
Average here, it was also a range. It was multiple things, and then, like you said, the 0.5 Fibonacci retracement. So
Hmm.
one thing that actually makes me lean a little bit more towards the market getting some upside here is Ethereum. So I'm excited to kind of look at that really quickly
Okay.
with you.
Yeah. Let's look at that.
Views on
There
that
hasn't
too.
been much going on with Ethereum, so I'm excited to see what you have to say. It's been so choppy.
Yeah, so Ethereum here, I've got like the cleanest chart set up here. It's two lines, right? And
It's beautiful,
just
yeah.
like just like that yearly average that I was just pointing at that sat at the zero point 0.5 Fibonacci for Bitcoin, the
Mhm.
yearly average here for ETH, which both of those being untapped is crucial, right? So this is an area
Mhm.
where it's similar to, once again, I bring it out to be a non-moving average at the end of the day, but it's a very high time frame, key mean reversion that we see time and time again, and at a high statistical hit rate that it gets met. For this measure, we'd want to see this held as support, but it does sit right here where we just came down to. Once again, the Coinbase chart here showing that the yearly pivot, and that's what those high time frame averages are. It is
Mhm.
sitting at around that 1990 area. I will say it did kind of front run it, is the only thing here on ETH that I don't love at the moment, because we zoomed in here. You could see that got if you want to get really exact, it didn't, hit it necessarily. So
Mhm.
we could easily see a little sweep of the low type of deal as we start off next week, and usually how we generally see. But overall, I just wanted to kind of point out here that this to me looks, many people would probably view this in the sense of being, oh, this is I think everybody's really given up on ETH, considering it dead. It's underperformed Bitcoin the entire bull run so far from 2022 essentially. And one of the biggest things for me last year was I noted a 50% pullback in the market was likely. That I know is going to happen? Obviously not, but just basing it on some technical analysis, and it was based on Ethereum. And that was the biggest warning sign to me. And this is when Bitcoin was trading at $73,000 back in March last year. And the pattern that presented itself, and once again, for anybody that's new to my strategy and things of this nature, I utilize range data based on volume, high time frame averages, and then things like harmonics, and I'll get into explaining them down the road. I'll just kind of explain how they, the dynamics of them and the anatomy of them while I'm pulling them up. But this was the pattern at hand that I was tracking for almost 2 years, basically from April of 2022. This is around the region when once we get that B point put in, is when I start looking for these type of patterns here, and usually it's like a a double bottom or an M top, or things that when you start seeing those, you start to pop up. And all this is, once again, it's a sequence of Fibonacci that generally has some strict rules as far as when they have completion areas, as far as the ratios would go. And then once completed and confirmed, they have specific targets. So this pattern here specifically has three specific target areas, and it's just a simple Fibonacci retracement. It's just, for me, I was able to identify that we had kind of come up to this region, got the rejection up here. So I was noting the three areas here, and I'll just kind of scoot this over so it's a little bit more clear. But the three targets of this pattern on the way down was the 382. So, and that's just pulled from simply fib retracement from all the way of 2022's low up to the high we put in last March. And then ultimately it's the gold pocket and the B point. Those are the three targets. A lot of times the B point will align with one of these two. But we came down last year and we hit the top side of the gold pocket, but we didn't fill the gold pocket. When I refer to that, it's I'm sure you,
Yeah.
for anybody out there, the 618 to 65 Fibonacci retracement zone is known as that golden pocket, the golden ratio. It's the highest probable area for a price action, an asset to retrace to. And so we front ran it back here, which was interesting. Then we got the run up back again earlier this year, and then we've come down. And once again, we front ran it, leaving this high time frame average. We didn't fill this region out. To me, I had to count this as pretty complete by that point, because we did tap the B point, and I was looking at this in the sense of being like, okay, this is overall pretty done.
Mm-hmm.
But now that we've come back and we've filled
Yeah.
this out, this is technically now, this is a 2-year pattern that took basically now a year and a half almost to unfold here, which is in line with that. Like, just like anything else, we were looking at a head
Mm-hmm.
and shoulders or a falling wedge, and it was several years to make. Generally, you get a little bit of time for the price to unwind, essentially.
Mm-hmm.
So let's just see. This was what, April of 22, and then 2 years to complete, and then in theory, we might have just took about a year to fully meet all the targets of this. So that's just one
Mm-hmm.
piece of why I'm a little bit leaning more bullish on Ethereum here at these levels. Otherwise, just looking at it from simple, supply, demand, liquidity, anything of that nature, right? When we
Mm-hmm.
came down to these areas too, we put in some lows back here in the day. We came down earlier this year. I'm sorry, this was July of last year. Pretty much kind of kept those lows intact again. Even when we wicked down here in February, we still kept those lows pretty much intact. Here is where it came in. Now we've come down and we've taken all the lows here for the last year, for 2024 up until even now, of course. So for 15 months, anybody that's been in the market, was underwater. Probably been underwater. Most people are coming in the middle anyways. But generally we see that time and time again where the liquidity sweep comes in, and then we get the move one way or the other. If it's from the high, we get a reject, we retrace, and then so far from the low. So from those two standpoints, I see this as a pretty bullish setup, to be honest with you. I mean, as long as we're holding above this region, so obviously we know where things can change. The fact that Bitcoin just came down and tagged the yearly average as well and got such a strong reaction back up to the upside just shows me a little bit more of a little bit of strength there. Obviously, we're kind of monitoring that right now. It's a little too soon to tell if that's our low. But yeah, I'm looking at ETH pretty good here. And then, just in some short-term outlooks here, once again, I'm utilizing range data with the fixed range volume profile tool. So I'm just taking that and pulling over this area of the chart here. This is giving us basically it's called the value area, which is essentially our range here. So for all this price action here, this is where the value area comes in, which is 70% of the overall volume that took place in all of this region, which is where price tends to revert to. This is almost like a little undersold or oversold area here. And when you get above it, it's an overbought type of deal. It's almost like an RSI. But yeah, and then in this region here, you have this white line protruding, where all the volume kind of peaks out right here. And this is the point of control. So this is where all the highest amount of volume took place. And if we were to slowly start creeping our way back up to like $2,700 and get back in that range, our natural target is back to that point of control, which sits at about 3,300. And on top of that, just once again, looking at this in a simple, just Fibonacci retracement from the highs to the lows, our gold pocket sits right at that point of control as well. So locally, I'm at least looking for a move back to maybe 2,800 to that $3,300 region on Ethereum.
Yeah.
Interested to hear your thoughts.
No, I know we weren't planning on it, but I think that we should maybe show my Ethereum chart. Yeah, so this is what I have for Ethereum. And just like what you were saying, how it came right down to that 618, the golden pocket, that's exactly what I'm looking at as well. And then just for Elliott wave theory, we're just making sure that it's holding this support down here and not coming down into wave one, which is your V area, I believe. So it is really similar, comparing this Elliott wave pattern to your Fibonacci pattern that you just showed. So essentially for Elliott wave theory, we can't have this wick come down really any further or close down into wave one, keeping our last wave up valid. So yeah, I have pretty much exactly aligned to what you're saying here. We're hitting that golden pocket. Maybe another thing to add could be a look at the RSI. We aren't getting a good divergence here. Like we're not getting that good bullish divergence that we would want to see. This is daily though. So let's see if I go down to 4 hour for how it's looking at. Okay. Yeah. A lot of times we don't get it on the daily, but look at here on the 4 hour, look at our bullish divergence here. So prices come down now past the golden pocket just a little bit. And you can see our trend here, our bullish trend. So this would be a bullish divergence on the RSI.
Interesting. Where would assuming obviously we got reclaim some ground here, but where would that fifth wave take the price action up to for ETH on your Elliott account?
So the full extension then would be up towards 5,700. That's the one extension. So just kind of like what you're saying, we'd really need to start breaking back up above like the 382 for confirmation. But ultimately, we should be making a new high up towards this 5,700 area.
So crazy. That's my region that I've been looking for and waiting for to get down to has been that 2024 low, which essentially is where we are now. And whether or not we got a little bit more downside at this point, like coming out of this region now has been my area. I've been anticipating to see that next leg up on Ethereum to the new highs. So interesting. I'm curious to see how that plays out on your end too there.
Yeah, really interesting. I think the RSI is really supporting what both you and I are saying, is that this could be our pivot here.
And isn't it crazy how, once again, like looking at a little bit of merging with the news, how we had these huge range bound activity for Ethereum, and then what did you get a few weeks back? We've got that Bybit hack, which was interesting to me. I almost felt like it was fake news because I used to trade on Bybit heavily before we weren't able to anymore in the U.S.
Mhm.
For years, and they almost, I'm pretty sure up until then, they were the only exchange, especially with that kind of tenure, that never experienced a hack. They never went down. They never have frozen during times
Overload.
of
Yeah.
volatility. Yeah, like I mean, they were that place. And then for them to come out as, I think it was pretty much actually the largest hack ever, it just kind of blew my mind almost. And
Yeah.
then the timing, and it was just everything like that. And of course, you get this huge drop, and it almost reminded me of like FTX, where
Yeah.
when the FTX collapse occurred, it was probably the most, honestly, it was the most savage move ever, because you had everyone willingly getting out of their crypto positions because they were so fearful that all the exchanges are going to collapse. And this is, let's just bring up the chart. So the FTX collapse, I just bring that up because that happened here. There was this little blip almost before we got this huge move to the upside. And you know how many people just hand over fist were willing to get out of their Bitcoin or any of their crypto, even because they were so fearful that the market was going to collapse, that other exchanges were going to collapse, all those things. The tax harvest. I had people that I knew bought back here in 60K areas, that held all the way down and decided to sell here in December of 2022, because at the time everything had crashed, and then they were looking to tax harvest and kind of like switch it over on some of their capital gains,
Yeah.
only to see the market just completely rip right after it. And when I saw that happening with Bybit just a few weeks back, it just very much makes me picture a similar scenario,
Mhm.
where even if you look at Bitcoin's price before that type of news happened, right? You had all this just sideways action, pretty much up and down. Obviously, this was a different time. This was, dead of a bear market, but you get that last little capitulation, a little bit more, slow time to the side, and then just completely upside. So this is actually something I'm anticipating out of Ethereum here soon. Is it going to be the number one altcoin to perform the market? Maybe not, but for me, I have, I'm leaning pretty big on Ethereum that we're going to see a lot of performance come out of this, especially now that we're in a place where everybody's completely counted it out. And it's due to price action at the end of the day. No matter what the news
Mhm.
is around it, things could be super exciting. But if the price is not moving or if it's dropping, that is the number one motivator for many people in the space. And that's what happens a lot of
Yeah.
times. People won't get involved, or they get uninvolved because of the price action at the worst possible time. So
Right.
interesting. No, I love to see
Yeah.
it. I love to see it.
Yeah, that looks good.
And yeah, so today we'll see if anything comes out of that summit. Like I said, it might be a little bit of a nothing burger for price action as we kind of go into the weekend. But let's take a look at the traditional markets as well.
Okay. Yeah.
We're gonna, the indices such as the S&P, the Nasdaq, many stocks have, even like Nvidia's come down like 20-30%. The
Yeah.
S&P and hasn't really come down that much, but in the sense of how much money is in that market is definitely something to be
Mhm.
said.
So this is the weekly S&P 500, and a lot of people say that Bitcoin kind of mirrors the S&P, but in a more dramatic way. And really, that's what we can see here. We have this major run on S&P, similar to Bitcoin. It hit a 618 extension on the S&P, and you can see that it has started to come down from there. So this is where I would have expected that last top to come. And then we have our retracement levels coming down. So our first major retracement isn't until 5,500, and we are still trying to make our way down there. I do think that we will be heading down there. And I think the last time I checked on the correlation, Bitcoin was in the high 80s to correlation to S&P 500. So that's really interesting that we're getting these signals of a top in S&P 500, as well as that potential larger drop on Bitcoin if it can't hold to that 0.5 retracement. So I think that that's really interesting too. If we do see this major correction in the S&P 500, Bitcoin could also follow that as well. But if you look on the RSI, this is the weekly, so it's even more strong what we're seeing here. Just all of these highs coming up from here right to that 618 extension. But then look at the
All
RSI, like,
divergence. Yeah.
yeah, it's completely losing momentum on the weekly, which is a huge time frame to have that print. But even getting down to the daily, you can see here we're starting to come down. We're starting to break past previous lows. Um, Again, this is our first support level down here. Um, and we haven't really seen like hardly ever any retracements on here. So it's really interesting. It's going to be really interesting to see where we actually do get a pivot here. Are we going to see a true major correction like this cycle like would need, or are we just going to continue to keep bullish like the S&P 500 has always done? So
Yeah,
really
I know
interesting.
it really is the number one factor too. That I think that even we have to keep in the back burner when we are looking at Bitcoin, because yeah, so far, I mean, it's very few times that they kind of separate from each other, where one is
Yeah.
going to the upside and one's going to the downside.
Right.
So if we're anticipating a type of move like that at the S&P, we have to be aware that that could happen with Bitcoin.
Right.
Like you said, that 0.5 level on Bitcoin at 80,000 is just so crucial to
Yes.
hold right now. So
Yeah.
it is at least a good 10% away from it right now. So at least we have a little bit of wiggle room. It's not like we're just holding on to it by a thread and everything kind of
Yeah.
looks like it might teeter over. It's really interesting that the S&P and everything is just exploding in the fashion that it is, because you'd feel like, and you'd seem like what is driving it really. It's
Yeah.
the economy and everything is kind of all over the place. We have the interest rates and high inflation, high
Yeah.
interest
It's
rates.
not making sense
Yeah,
at
everybody's
all.
struggling. I'm not sure if you're aware of my higher time frame analysis on the housing market cycle, or the economic cycle, I guess you could call it. But that's kind of the backbone of all my macro outlooks here, which is another reason why I'm looking at Bitcoin and Ethereum kind of the way I am right now in this time frame.
Mhm.
And it's a long, winded version of basically saying, we have 20-year cycles that literally occur every 20 years. I mean,
Mhm.
and it's an average. So it's not like it's every exact 20 years. It's sometimes it's
Mhm.
17, sometimes it's 22, average of it about 18 to 20. And for crypto, my theory is that we're actually, instead of all these 4-year cycles, which so far have been the only thing we know, because it's just the few sample sizes that we have to go
Right.
off of.
Mhm.
But I've, kind of been building this theory that we were building the first 20-year cycle alongside the housing market, because in theory, the housing market after 2008 crash restarted that kind of economic move in about 2012, 2011. Bitcoin was born 2009. Really, no data points really sit until about 2000. It was born in
Mhm.
that same window of time. Same with XRP.
Mhm.
But um,
No, Paul, I think you could be onto something, because if you know Elliott wave theory always travels in the 5 waves. And if you think about it, if each cycle of those is 4 years,
I
then
was
a
going to
full
ask you this.
complete
I'm
cycle would
glad
be
you brought this up, because
20.
yes, I've been wondering if you have looked at that, because
I
that
love
is
that.
kind of how I view it too, where
Yes.
we're in that last major wave of this like 20-year pattern basically.
Right.
And honestly, it explains, when if I was to go into it deeper, I mean, there's the stock market. I mean, the housing market is the only one that truly hasn't exploded anymore since the last few years, but it hasn't really retracted. It's just been
Right.
kind of coasting.
Mhm.
So it's when you look around and it's like, why is this going on? And I wouldn't be shocked, honestly, to see the S&P not come down and turn around and
Yeah.
make new highs again, because
Yeah.
that's just been the way it's been. So it's very interesting, and we'll have
Yeah.
to touch on your 5 wave on that, because
Yeah.
I'm interested to hear about that and the timing of that. If you time it, I don't know if you can or not. But anyways, the 20-year cycle in theory for me is
Mhm.
coming to a close here between 2026 and 2029.
Mm.
Really, I lean more in the 2027, 2028 window. And then on top of that, we have the 100-year cyclical anniversary of
Yes.
the Great Depression in 2029. And if
Right.
you look back in time, all the things that are happening today happened then. We had tariffs, we had, all these things. And
Mhm.
it's very interesting to see unfold. So
Yeah.
we'll be here, I guess, for it. But
Yeah.
I want to share the Nasdaq here too, and
Okay.
in kind of compared to your S&P outlook. So this is another reason why I wanted to bring up those high time frame averages on Bitcoin earlier, when just to kind of put that into perspective, that 80K, how important it was. But for the Nasdaq here, same deal. So looking at this in the sense of just as you were with the S&P, pretty much this is on a weekly time frame. So monster move as you can
Mhm.
see here, and we're getting a pullback here. Could it get deeper? It can. Realistically, nothing's really broken. I'm pulling a Fibonacci retracement just from the last low here at the 2022. And even
Yeah.
just to come down to the 382 or even the 236, I guess you'd be the most shallow. But nothing would be too crazy to come down all the way back to like 17,800. Gold pocket areas down in this region. We've got I have noted a a volume level. Those point of controls earlier I was looking at with Ethereum, where it's up at that $3,800 level. This is one similar to that on a high time. This is a 6-month area. So for 6 months of price action, the most highly traded area on the chart was at 15,210. But at the moment, it's just, these are just areas to be aware of, because the one that really matters, in my opinion, is this one right here, which is where we're coming into pretty much right at the time of recording this video. And it sits here about 19,900. And that's the that's the yearly pivot. So 200-day moving averages are usually key, right? Above bullish, below is bearish. This is the 365-day non-moving average that you really want to hold. It's definitely a line in the sand at the moment for any more upside. So when I look at this and then I look over to the S&P, if I'm anticipating a bounce here out of the Nasdaq, I could just see the S&P just U-turning right again, right? Front running everybody's pullback. So we'll have to see, of course, but that's kind of a little interesting to me that we got Bitcoin came down to its yearly average, got a nice bounce. We got Ethereum putting in my opinion, at least, and I think you can agree that we have a pretty decent area for a possible reversal, for a major reversal at that, as if it's going to come to fruition here, but that's just where we're looking at. And the Nasdaq, I think, is just getting a peaceful pullback here. And I'm looking at pretty much right where we are to see if we hold that as support for a bounce. Otherwise, nothing out of the ordinary to just come down a little bit more. This would probably be in line with your 5,500 S&P target area. We did get that pullback into that region, and then deeper correction would be down into the 1500s, which still would be a normal, natural higher low type of scenario before any more upside if we get it. But I wouldn't overlook where we're at now on the Nasdaq for anybody that's looking there. Really quickly, I wanted to touch on the DXY. As we both know, obviously, the DXY, which is the dollar index, generally, it's similar to how you were saying earlier. S&P and Bitcoin kind of go hand in hand. Usually when one's getting an impulse, they both are, and the same with a pullback. The DXY is kind of known to be this inverse chart, so to speak, for like risk assets such as crypto and the stock market. So generally when the DXY is going up in value, risk on assets come down, we get the pullbacks. A lot of times that's bear markets in crypto world so far, at least. And when the DXY is coming down, that's ideal. It's like the dominance chart. We want to see the DXY go down as far as, value wise to see some of those risk assets start to increase. So similar to that Ethereum chart where I was looking at last year, where there was a $4,000 harmonic pattern where I showed the sequence of Fibonacci. It had those specific targets to the downside. It was a huge bearish reversal that took 2 years to make. And I think we just completed the target zone 1 year later. And that's about what it is. If it takes 2 years, it's usually 50% of that time to unwind. So the same exact bearish reversal pattern here in the DXY has, complete. And once again, this is a sequence of Fibonacci's basically paired off this impulse move up to this B point to this area here. All these ratios are important. They all have to be pretty much in sync together with certain ratios alike. And then they have specific targets to the downside. So the completion zone of this, I think we can, at least I'll say that it's a pretty good valid pattern at this point. This is known as the bearish bat pattern. And it's the same exact one that we had on Ethereum from last year as well. And the targets are same deal. So a Fibonacci retracement from A to D, the 0.382, the B point, and then your gold pocket area all the way down here. And if we zoomed in here, we have the confirmation of the pretty much a lower high. So we had this drawdown right here, front ran all the targets. We just came back up into a local gold pocket. So I'm pulling that from just a local Fibonacci retracement from this high to this low gives us this gold pocket. And we look for that because you want to see that lower high come in now, got the rejection, and we've got a sizable reaction here. So I would say that is pretty much lower high confirmed. And I think that we'll see the rest of this start to play out. Now, the thing about this pattern, once again, going into that housing market idea, is that if we're going to see, in theory, housing market cycle, maybe the first 20-year crypto cycle all kind of comes to an end, 2026, 2029.
Right.
It's another couple of years here. This was a 20-year pattern, or it took 20 years to print, basically. So, and it completed in 2022. So it's already almost 3 years into the time window. So in theory, we'll probably have like a 5 to 10 year time frame where it's going to unwind into the target zone. So 3 years already in there. 2 to 3 years from now is, kind of where that sweet spot's going to lie, about that 5 to 8 year mark. And in theory, we should see this continue lower, which in theory, again, is going to lead to the stocks continuing higher, crypto continuing higher. All assets are kind of going to rise. And it's just interesting because that time frame aligns with that,
Yeah.
end of this decade, and a line up there. So I just thought it was an interesting thing to
That
point
is
out.
interesting, Paul. Thank you for sharing that. And it's
Yeah,
interesting seeing your other Fibonacci patterns too. I've never heard of those, but it just really aligns with what I'm used to on Elliott Wave too. So thank you.
yeah,
No, I love
absolutely. And
that.
I've never done Elliott Wave, so I really love that you do, because that's something I've never really gotten into, as far as like just being knowledgeable about it, right? Like I
Mhm,
get the gist, high level, and I can follow it, but I wouldn't know all the rules and
mhm.
everything about it. So
I love how we can track our technical analysis, from crypto over to the other traditional assets. Like it just really builds like that foundational trust with me, with our tools, with the different theories that we're thinking. I love bringing that across the different assets. So I think that that's one of the best ways to build your trust on a tool and your analysis is being able to go into a market you've never seen before and try to do your analysis. So this has been great. I love this. Yeah.
awesome. Yeah, same here. All right. Well, Cassie, I think that's all the time we've got today. I mean, we've covered quite a lot of things here. So we'll just have to leave it up to see how the summit goes tonight, and see what the weekend brings us and into the next week. I know I've really enjoyed this episode collaborating with you, and I hope to do a bunch more in the future. So thank you so much for coming on and for your time. Just a friendly reminder, once again, a shout out to Coinbase, our channel partner. If you're interested in looking for a new exchange, or if you're brand new into crypto, get signed up with the link down in our description below for up to $200 towards your investing journey. So be sure to check that out. Aside from that, make sure to leave a like and subscribe to the channel if you enjoy this content. Cassie and I, Ryan and Nick, we're coming to you pretty much every day, bringing you as much content and as much value as possible from the investing side. With that, I bid you all a great weekend. Cassie, thank you again.
Yeah.
And we'll
Thank
look forward
you.
to seeing everybody in the future.
Yeah. Thank you for having me. Have a good weekend.